Welcome back to Financial Independence 101. This is Mike, and today I want to talk to you about the Dow being down, the economy, but most importantly, I want to talk to you about, should we take our hits and just suffer through a recession now, or the inevitable Depression 2.0 that would come up? Now, I'm not a doomsayer. I'm not an alarmist. I'm not a prepper. I have made preparations for myself since 2016 for this very scenario and my family, so we don't have to worry about it as much. We still are concerned, but not to the level that people in the stock market are. But the reality of it is, every single thing that the government is proposing to do is going to cause us to skip a recession and go straight into a depression, a 2.0 depression, a 1929 to 1933, 1934, that time frame depression. And it's scary. It's very scary. And I hope they don't do all the things they say they're going to do. I hope they don't spend the money, but we're going to talk about all this coming up. Now, I made a video already talking about these bubbles and are they popping and fundamentals of the stock market and all this stuff. But the reality of this is coronavirus is only a catalyst to popping these bubbles. So the coronavirus is bad. It's rough stuff, but it's only the catalyst. It's the catalyst that will pop this bubble. It's the catalyst that will expose how weak our economy really is. And yes, it will do that. The coronavirus in itself is a serious situation, and public health needs to be number one. But when you get past the fact that when we're looking at the coronavirus in the rear view and we look around and the stock market's still getting decimated, and we still have no yield in the bond market, we still have no yield in the treasuries, no yield, there's no place for savers to put their money. We have a rough economy. We are in either a recession or a Depression 2.0, and you pick. Now, one thing I want to talk about is Main Street versus Wall Street. Wall Street's usually a leading indicator of Main Street. So when the stock market's crashing like this, it's because we know, or they know, that businesses are going to start crashing. Restaurants are going to start having trouble filling their seats in fear of this virus, right? But how many restaurants are going to make it 2 or 3, 4 months of no business, of little to no business, when this hits its mass, when it hits critical level? Walmart will make it. Well, Walmart will always make it. People will figure out how to cover up enough to get to Walmart, right? Walmart's going to make it. Sam's, Costco, all those places are going to make it. But little mom and pop shops probably won't. How many little mom and pop shops are going to get bailed out? All these trillions upon trillions upon trillions of dollars the government's going to spend and create out of thin air. How many mom and pop businesses are going to get bailed out? Hey, maybe they will. Hey, it's a possibility. I mean, heck, if we're already going to spend 25 or 30 trillion on this whole situation, why not another 10 trillion? It's going to get rough. Government should just let it play out. When I say government, Trump and Powell, I want to give Powell a little credit, although I can't believe he came out with this whole 500 billion to a trillion, there to say it right, plan that he came up with, that the markets reacted to for 5 minutes, yay, and then back to sell off. A trillion a week gave like 5 minutes of relief to the market. Can you believe that? A trillion a week. I do want to talk about people in the media. When you watch CNBC, it's a lot of people trying to be overly positive. I actually think I'm going to tune in and watch Lightning Round with Cramer, and I want to hear how many buys there are. I almost think it's criminal to tell people to buy into the market right now. What's going on? I've been out of the market since 16, so I mean, I've got 4% of my money in there that I want to hear Jim Cramer and all his buy recommendations. Dave Ramsey, I really love Dave Ramsey's show. His personal finance is great. His investment strategies are very, very basic. And he came out with a video talking about how stupid people are for selling right now. So if you sold at the beginning of this week, you had 15% more money than if you were still in the market today. And if you sell today, I can't predict what's going to happen the next few days. But I don't think we're at the bottom. I don't. I mean, I think Dow 20,000 is still a bit overvalued. And we're at almost 22, 21.8. So these people coming out trying, I don't know why. Why are they coming out to try to be so ultra positive? Stay in there. Hang in there, buddy. Ride the wave down. Long term, 10 years from now, you might get back to halfway where you were. I mean, I don't get it. I don't understand. Like, they did this in '08. People getting wiped out. And they're telling you not to worry about it. $200,000 drops to what, 70? I knew people with $200,000 in their portfolio at the end had 70. Well, some of their aggressive stocks got hit really hard, you know? I think this is worse than '08. It's going to be worse. This is barely the beginning. This is barely the tip of the iceberg. Even though the overall market is overvalued, and that's my belief that it's still overvalued, the good stocks are going to get thrown out with the bad. Now, we've talked about valuations in the last video. If you want to, go watch that other video so you can kind of get an idea of valuations and what are fundamentals that we threw out years ago and stop looking at fundamentals and caring about fundamentals, and we just buy what's hip to buy or fun to buy or exciting to buy. But most people just buy ETFs, and when you sell your ETF or your exchange traded fund, or you're selling your entire Dow, or you're selling entire NASDAQ, or you're selling whatever, but you sell those, or your mutual funds, you're selling good stocks with the bad stocks. You're not really making informed decisions. So really, right now, the market's being driven by one of two factors. The two factors that's driving the market right now is fear and greed, and we haven't seen panic yet. We've seen fear, but not panic. True fear, true panic selling, that is what happens when we see the bottom. We're not at the bottom. This is just people reacting. This is investors reacting, and a lot of this is institutional trading too. So I don't think we've seen the bottom, but nobody can truly time the market 100%. Nobody can say when it's high, this is the top and this is the bottom. At Dow 29, everyone was looking at Dow 30, Dow 35. Now, who knows how low it's going to go. But I do know it's still overvalued. I felt over 20,000 was overvalued. I got all my money out at 20,000. Yeah, I could have made another, 9,000 and lost it all. So the Fed came out today saying that they are going to start buying up $1 trillion a week worth of bonds. So the Federal Reserve is going to buy the federal government's bonds. Actually, they're buying up the bonds that's already been put out. The bond market has almost completely halted. It's collapsed on itself. But looking at this, they're going to be spending $1 trillion a week indefinitely. So they'll have spent what? Or created. So what the Federal Reserve is going to do is create this money in the repo market out of thin air for the rest of the year. So $25 trillion is going to do for the rest of the year. I don't know how that's going to go. They say indefinitely. So what? 3 months? They think it's going to be over. Who knows? But that is scary. That is really scary. That's one of the scariest things I've heard them say in a long time. Which that is the factor that if they do stuff like that, we're going to take a serious recession and turn it into a depression 2.0 by destroying our dollar. Let's talk a little bit about this wage bailout. So there's a lot of ideas getting thrown around, maybe doing what Bush did, sending $500 to everybody, and that's working. I think that more of the plan is changing to allowing people get paid time off when they're sick so that they don't spread this, which is a good idea. But in the end, all of this is going to cost us, right? There's going to be a cost to this. And the reality of this cost is going to change. We can't afford it. We are already broke. We can't afford to take interest rates to nominal levels, which I guess we should talk about here in a second. But we can't go back to 5% interest rates because we're so broke, the government can't pay it. We can't pay a 5% interest rate because we're that broke. Have you thought about that? That's how broke we are. We're not at zero because we want to be, because Because we have no other choice. If we raise the rates, then we can't pay it. They raise the rates, they risk becoming insolvent. Have you thought about that one? That's scary stuff right there. Negative rates. If we go to negative rates, we'll never go back to positive. We'll be like all these other countries that went negative. It's not going great over there. I don't know what people think. If you go to negative rates, savers are destroyed. Which I guess, well, we don't want anyone to save anything. That's ridiculous. Savers are destroyed at the same time that the market is collapsing. At the same time, where's this money going to go? In the mattress? It's just ridiculous. You can't get a yield in the bond market. You can't get a yield in the treasuries. You can't get a yield buying fixed income assets and CDs anymore like I did all last year. All last year was some of the records in the last decade. But I was buying those up. This is ridiculous. We keep spending this money at this rate, and every single thing the government does is going to destroy us financially.